Good morning, guys. How are you doing? Welcome to T-Cube, Trade, Travel, Truth. I'm Rich. If you're new to this channel, please like and subscribe, and we're going to get into it today. Our topic today is the debt that makes you rich versus the debts that keeps you broke. And, we're not going to talk all about trading all the time, so this is kind of like more financial things that kids, young people, even older people don't really know about that much. I watched that financial audit with that Caleb guy, and it's amazing and people don't know about debt. But first, let's update what's going on in the market real quick. What happened? So we had some big tech earnings yesterday, kind of a mixed reaction. Alphabet and Amazon crushed earnings, stocks up. Meta, platforms, and Microsoft dropped. AI spending is exploding and investors don't like the cost. That's pretty much Meta down 9% despite strong results. Market is starting to question how long until AI actually pays off. So yeah, that's kind of the sentiment going into it. So not a surprise there. Inflation and GDP just came out. PCE inflation, Fed's favorite, is 3.2 year to date. GDP is a 2% growth. Yeah, so, everything costs more. People are feeling the pain, and it's not because of prices going up. It's because the dollar is going down, obviously. Inflation is probably it's closer to 10%, so I wouldn't even, that's that. Economy is still solid. Inflation still sticky. Yeah, so the K-shaped economy is still going strong. Oil and the Iran situation, volatility spike. Oil surges recently over Middle East tensions, now pulling back slightly today. High oil equals high inflation. Inflation risk is bad for stocks, right? So there you go. Talk about Tesla. Tesla weakness. This is why you're seeing it red. Tesla's down because of massive $25 billion AI spending ramp. No near-term revenue from Optimus and Robotaxi yet. Missed delivery expectations. Yeah, so we already know that. And Bitcoin today is kind of cooling off a little bit. Was near 76K, now pulling back. Normal after strong move. Everybody's taking profit. Some leverage unwinding. So what's really going on? Bullish, strong earnings. Amazon, Google, economy still growing. Bearish, AI spending too high, hurting margins. Rates staying high, geopolitical risks, oil, Iran. Results, choppy market, exactly what you're seeing, right? So no surprises there. What matters for you, volatility equals great for premiums, direction unclear, perfect for your strategy or my strategy. Tesla, still volatile. So yeah, nothing changes. This is why I love this strategy. I'm going to call it the ping pong method. I don't ever get stressed out at all, so it's pretty good. All right, so let's get into the topic of the main title here. Go back up. The debt that makes you rich versus the debt that keeps you broke. So the only reason I'm doing this is just give some people some financial. If you're trading, you should probably know a lot about finance, just so you're not, scraping by to blow up a trading account. You put a couple grand in there, you blow it up. You need to be out of debt. There's certain good debt and there's certain bad debt. I disagree with Dave Ramsey a lot. He's just saying pay off everything, and some things it doesn't make sense to pay off. When it comes down to of an overall thing, like if you're making more percentage in the market than your loan is or whatever, then why would you put your money in that loan? That's just my logical off the top of my head. But all right, most people were taught that all debt is bad, like Dave Ramsey. Stay out of debt, cut your credit cards, pay everything in cash. And honestly, that advice keeps most people broke, because the wealthy don't avoid debt, they use it. And the difference is knowing which debt works for you and which debt works against you. Today I'm going to break down the good debt, medium debt, and bad debt, so you can start thinking about money the way wealthy people actually do. Let's get into it. So it's all a mindset, guys. Trading, finances, all a mindset on how to become wealthy. The good debt, right? Multifamily properties, mortgage, right? This is where real estate, if you're buying, makes makes sense. We're talking duplexes, triplexes, quads, and full apartment buildings. Why multifamily? Because you have multiple income streams coming off the single loan. Basically, you're taking a loan out with something that cash flows and gives you more return on investment than the actual loan itself. One unit goes vacant, you can still have 2 or 3 others covering the mortgage. The math works completely different than a single family home. Single family rental can work if the cash flow makes sense, meaning after your mortgage, taxes, insurance, maintenance, you're still putting money into your pocket every month. But that's a lot of work, right? You got to freaking take calls at 2 a.m. The heat's not working or something. You got to evict people. I didn't want to go down that road, but whatever. I mean, if you're younger, it might be better for you, but I'm not chasing people around anymore. But if you're breaking even or going slightly negative just to build equity, that's not a good debt anymore. That slides into medium territory. With multifamily, the goal is straightforward. The tenants pay the mortgage, cover the expenses, and there's still cash flow left over at the end of the month. That's using debt correctly. You're using the bank's money and your tenants' rent checks to build assets that you own. Over 20 to 30 years, that property is paid off, and you're collecting pure cash flow. And that's the bigger you scale 8, 20, 50 units, the more powerful it becomes. That's why that's why serious real estate investors go multifamily. It's not about one tenant, it's about building a machine, right? So if you have, the more places you have, if you can't fill the apartments up, at least you have other income coming in to cover those expenses. Single family, you can't rent it out for a couple months, you're paying the mortgage, right? Pretty simple. All right, a business loan, pretty easy. You borrow 50 grand to start a business that generates 150 grand a year. That's return on investment. That's a no-brainer. The debt is producing income that far exceeds what you borrowed. The key is the business actually has to make money. We're going to get into business stuff too. You want to keep the business something simple. It's been done before. Really simple, repeatable. People are making money off it. Don't try to reinvent the wheel when you create a business. Like I was looking into it. Storage facilities, buy one of those. Laundromats, stuff that takes very little maintenance. Car washes, right? Well, car washes, you still got to fix those things. I think storage facilities is probably the least amount of maintenance out of those 3. So business loan's good. All right, margin in your brokerage account. So that's what I do. But this one is kind of, you got to know what you're doing before you do it. I don't suggest you do it. Obviously, I'm not a financial advisor or anything, but don't mess with margin until you've got a system down that you think is working in your favor. This one takes skill and discipline. And I want to be clear, this is not for beginners. Margin is borrowing money from your broker to invest. If you know what you're doing, selling covered calls on a position, buying a stock you've done deep research on, or using it as a short-term bridge, margin can amplify your returns significantly. The danger is using margin emotionally or recklessly. One bad trade and the margin can be wipe out the gains you took you months to build. But for an experienced trader or investor who understands the risk management, margin is a legitimate tool that the wealthy use all the time. The key word is discipline. So yeah, I make sure I have a margin buffer at least 50 to 60% at all times. Obviously sometimes like the drawdown in Tesla, it's gone down to like 30, but that's why I have it at 60 so I can handle that drawdown. Margin, so that's the one I use. So my margin, Robinhood has really good rates. I'm at, I think, 4.25% they charge me, and I'm making back returns at least, year over year, the stock in general was about 60% last year. This year, it's a little bit down because of all the crazy choppiness, but I'm definitely making more than 4% in the market. I made 8% total just on options, and that has nothing to do with the underlying stock. HELOC on an investment property. Home equity line of credit is a good debt if you reinvest it, right? If you go it and blow it, it's not really a good investment. Home equity line of credit lets you pull equity out of your property you already own to go buy another one. You're essentially recycling your equity to keep acquiring assets without needing fresh cash every single time. Real estate investors do this constantly to scale their portfolios. You buy a property, it appreciates, you pull the equity out via a HELOC, and you use it to a down payment on the next deal. Rinse and repeat. That's how people go from one property to 10 properties without having to save up a new down payment every time. Yeah, so obviously you got to reinvest it. If you take it out and blow it, that goes into bad debt. Equipment or inventory finance for a business. So yeah, if you take a loan out for more equipment to expand, obviously it's good debt. You take it, and waste it again, not good debt. So low interest auto loans for a work vehicle. Yeah, so auto loans really are kind of not your main vehicle is probably a medium debt. Work vehicle, obviously, if you need it, like your landscape, you need a truck or something, yeah, that's a great loan to do. Just don't buy some crazy vehicle with all the bells and whistles for a work vehicle, right? Try to keep it down. You're a contractor, tradesman, delivery driver. Business generally depends on a vehicle. So that's another good debt. Let's go on to medium debt. Primary home mortgages. People are going to get pissed when I say this, but primary home mortgages is not the best debt to be in. And the reason why is a couple reasons. You got to put a big down payment usually, I mean, I don't have to because I can use a VA loan, but if you're not a veteran, you have to put usually 20% down. And, houses today are at least $300,000. So that's 60 grand that you have to put down in that thing that it's stuck in there. You can't take it out. You can take that loan, take 60 grand, you save up, put it in investments and make money. Plus you're paying mortgage, which is whatever, that's good. You're building equity, but if you do the math, the insurance, the taxes, all the problems that come up with it, buying a house is not that great of an investment right now, especially with how high the prices are. I don't have a house. I sold mine in Texas years ago. And the reason I'm in my car all the time is because me and my sister take care of my mom, and I have no place in there to record these. So it's either outside or in my car, and today it's raining, so I'm in my car. I hear people like, why are you in your car? I go, listen, I don't want to be, and soon I'm going to be in another place. Well, that's going to be a surprise, but it's not soon, but, next 6 months, year, probably. Okay, back on it. So primary home mortgage is in the medium debt. Student loan for a trade or high demand skill. So yeah, regular student loan for a piece of crap degree is in the low, and we'll go over that. But if you're doing it for like being an electrician, plumber, or you have one of the degrees that actually makes sense, like engineer, nursing, stuff that AI is not going to take over. But if you're going to school and taking debt out for a liberal arts degree, gender studies, psychology, political science, any of those dumbass things that you can't get a job when you get out is the dumbest debt possible, and you're a moron for taking it out. I'm sorry, but you are putting yourself in debt. Young people, listen up. Do not put yourself in debt for a degree that you can't do jack shit with. All you got to do is ask ChatGPT the top 10 jobs that are wanted in the country, and then get a degree in one of those. Pretty easy. I think the government should friggin' take the top 10 jobs we need in degrees and give grants to those. All these other ones, you don't get grants for dumb shit like gender studies. Sorry, my 2 cents. College is kind of a scam in my opinion. All right, medical debt. Obviously, nobody chooses to get medical debt. This is a medium. I heard they're probably changing the way it affects your credit score, where it's not going to be so heavy weighted. Obviously, medical debt, you got to do what you got to do when you're not feeling well. Nobody chooses this. It's unavoidable sometimes, and it's not a reflection of poor financial decisions. The key thing most people don't know is medical debt is highly negotiable. Yeah, so you can go call the thing like, listen, I don't have insurance, and usually they cut the bill in half because they bill these insurance companies almost double. So I just got one for some labs I had to do. I got to send it to the VA. They charged me $825 for a friggin' lab. Unbelievable. Anyway, and then another good debt is, or this is medium debt, in the medium, small personal loan to start a side hustle. Like if you want to take a couple bucks out to start a side hustle. But again, I probably would try to pay that in cash, work your main job until you get enough money to start that. Because you don't know if the side hustle is going to work out, right? So I don't really want to take a loan out for that. So this is what not Gronk, but Claude came up with. As long as you, like, say you've been doing it for a little bit and you want to expand it and you know it's successful, yeah, I get that. But I'd probably try to save up 5 to 10 grand myself. All right, bad debt. All right, credit card debt. Obviously, credit card debt is horrible. They got high interest loans, and they usually start with 0% for a little bit and then go up to 20% interest sometimes, and people don't even realize they've changed. So you want to stay away from credit cards. I'm going to make another way on how to use credit cards to your advantage. This is what I do. I'm going to make another video on that shortly. Stay tuned for that. It's awesome the way I use credit cards, and I think everybody should do that for security and building points for free, pretty much. Student loans for the wrong degree. Again, we just talked about this. The worst debt possible. Going to debt for a dumb degree that you can't use on the outside is the worst kind of debt there is, in my opinion. Liberal arts, political science, psychology, history, all these degrees you can't do jack shit with. And then if you go further, get a master's, a PhD, then you have so specified your areas of expertise. There's like one job in the country for, somebody's got a PhD in Western Indian society or whatever. It's just ridiculous. I had a friend. This is funny. I had a friend whose wife was getting a PhD, and she was hadn't had a job, and she's like 35, 36, still working on the PhD. And I go, what's it for? Oh, she's like migratory habits for Eastern Africa gerbils, some dumb thing, like some animal that I've never even heard of. And I go, well, where is she going to work with that? Oh, the Smithsonian's hiring. They hire about one person every couple of years to do something like this. I go, well, how much does it pay? $50K. I'm like, she is wasting your money and being in school for all of her life so far to come out with a PhD to make 50 grand. Are you freaking crazy? He ended up getting divorced because the chick was absolutely nuts. She had like 10 cats in the friggin' garage. It was just ridiculous. People are so stupid. I just don't get it. Another one, vacation debt. I see a lot of people do this. People, like especially younger kids, they come out of college, they get their first job, they work for a couple months. Oh, I deserve a vacation, and they put $4 grand or something on a fucking buy now, pay later thing. If you're putting vacations on debt on credit card or whatever, a payment plan, that is another bad debt. Like, why would you do that? You don't need to go on vacation. I mean, you party every weekend, you go out every weekend with your friends, you're sitting on TikTok. You don't need to go put yourself in debt to go on vacation. Save a little money. Make it worth it more. It's going to feel better when you actually spend time saving the money. You're going to feel better about the vacation than you are when you got to come back to a debt. All right, Uber. Oh, this is another one young people do. My sister does this too. Don't say anything. Uber Eats, DoorDash, and food on credit. Like, that is just, you're paying almost double the amount to do Uber Eats and DoorDash and stuff. I have never used any of those services. If I want something to eat, I just go there and I pick it up, or I eat there. I mean, it's not that hard. Like, you are lazy as shit if you can't get your ass off the couch and go get food. All right. I'm sorry. Look on that show, Financial Audit, with that Caleb guy. All these people just blow so much money on Uber Eats and DoorDash. It's just ridiculous. Like, I don't know. I have never used it, and I will never use that. So, all right. Yeah, the buy now, pay later, Afterpay. I never even heard of Affirm and Culinary or whatever the hell it is. I see people like buy now, pay later for Coachella or some stupid thing. Like, again, it's kind of like a vacation. Like, what are you doing? Stop it. I mean, take a little patience. Like, you don't have to have everything right now. Like, build something first. Payday loans. Yeah, this is other stuff. Yeah, any kind of loans. At all possible, A lot of people are in credit card debt and take out big loans to pay it all off at once. If at all possible, avoid that too. Pay your highest interest rate debt first and then go down from there. There's been a debate whether you should pay off like the lowest balance first or the highest rate. If you can pay off the lowest balance quickly with one payment, yeah, do that. But obviously work on the higher interest rate, I think. That's my 2 cents, because you're losing more money that way. Luxury car on financing. Like, I'll tell you right now, that's what I have the only loan on is I have a Lexus. This is a Lexus. I'm old. I want something comfortable. I can afford it. So this is kind of bad debt. I'm paying like 5% on this. It's half paid off. Like if you're getting a luxury car and you're living beyond your means, yeah, that is the bad debt. This is the only thing I spend money on. I don't have a mortgage. I give my sister rent. And that's why I'm able to invest all this right now and how to build everything back from zero. So yeah, luxury cars. If you're making 40, 50 grand a year, you shouldn't be driving a brand new BMW, right? Simple as that. This car is kind of my reward for kicking ass in sales for a couple of years. So I don't feel bad, and I can afford it. And it's going to be paid off very shortly. Furniture and appliances. Yeah, I mean, if you need to take a loan out for furniture and you're broke, I'd probably just go to garage sales or go to, what's the other one? Goodwill or something to buy. They have really good deals at those places. Used to buy my furniture at Goodwill. But I'm a guy, I don't care about the latest trends. Clothing, starting to rain, so I don't know if you can hear it. Hopefully you can't. But all right, the last one, I think we got 2 more. Clothing, shoes, and fashion. This is more for girls. They spend money on clothes and fashion stuff more than guys. Stop going into debt for that, all right? I know it's retail therapy or whatever, but it's just not worth it to go in debt. It's bad debt. And the last one, this is going to be more guys, is gambling debt. Gambling debt's not, if you have a problem, if you're stealing money to gamble and all that kind of crap, just don't. Yeah, gambling debt's probably the worst. It's really bad here in New Hampshire and New England in general, Massachusetts. People play Keno, and I don't know if you know about Keno, but it's kind of like this number game, and it's like games every like 2 minutes on the monitor, and you can pick numbers. It's kind of addictive up here, and I see people, and the odds of it's just ridiculous. So house always wins, right? All right, so here's the bottom line, right? Debt is a tool. A hammer can build a house or break a window, right? It's not the hammer's fault, it's how you use it. Wealthy people use debt to acquire assets and make them more money. The average person uses debt to buy things that disappear, depreciate, or keep them stuck paycheck to paycheck. So that's pretty much it, right? If you're getting into trading, you should really know a lot about finances as well before you even get into it. And we're going to talk about why college is a scam, how to use credit cards correctly as well. And then we'll figure out other topics. But I know they don't teach finance in high school. I wish I went to 1 year of college and I did business administration. I didn't even know what the hell business administration was. So obviously I didn't finish. If I had to do it all over again, I would definitely get into finance and learning this stuff a long time ago. So if you're young and you're looking at this, get into finance. If you're old like me, I'm going to be 57 in a couple of weeks. Just learn everything on YouTube. Finance is where it's at to get yourself out of a rut. And you just have to know a lot of things, good and bad debt being one of them. Anyway, that's it. Please like, subscribe. Have a great day. And what's today? Today is Thursday. All right. Adios, amigos. Bye.